Okay, right, we'll make a start. And so, guys, welcome to the second SMTFX webinar for this year. We did a webinar earlier in the year, around about May time, where we covered order flow. So if you've not seen that, it's actually on our YouTube channel. Feel free to have a look at that after this. And yeah, so today's webinar, we're going to be covering structure. So there's a couple of points we're going to be covering with structure. So first off, we're going to be looking at basic market structure. Okay, so we're going to identify how to view market structure, things like highs and lows in the markets. And then what we're also going to look at is advanced market structure, how we're going to see strong highs and lows, the significance of these highs and lows, and how we can incorporate using these into our trading as well. And towards the end as well, there will be a free downloadable PDF that you'll be able to take away, and you'll have pretty much everything that we've covered in this webinar today. So to start with, basic market structure. To understand market structure, we must first understand how to identify highs and lows in the markets. And so before we look at some actual chart patterns or some chart examples, what we do, we'll cover these two basic pictures here. So first off, on the left here, we've got a uptrend where we've got a higher high being formed, and then we've got a pullback, and we've now had a low formed, and this low is our higher low. So this low is higher than the previous low to the left, and as we can see, price starts pushing to the upside. Okay, so this is where we can identify our high or our higher high and our low or our higher low. Now, when it comes over to the supply and demand, we can now incorporate this into looking at our structure with supply and demand areas. So instead of having our order blocks or our supply and demand zones halfway up a leg, we can start to look at supply and demand zones around significant points of structure. So higher highs, higher lows, and stuff like this. So as you can see here on the right, we've got a supply zone that has now failed because demand has taken over control. So as you can see here, we've now got a bullish uptrend, okay, and the demand is clearly in control. So when we have something like this, it's clearly obvious that we don't want to be looking for short trades, because the higher probability outcome is going to be our demand zone. Now, on the flip side of this, we look at bearish structure. It's exactly the same, just the other way around. So as you can see here, we've got a low or a lower low, and then we've also got a high, but it's also a lower high. So this high is now lower than the previous high. And again, when we incorporate our supply and demand, or even our order blocks, into the equation as well, we can see that demand has actually lost control of the markets here, and we now have supply currently in control. So taking shorts from this point of view would be more probable than taking longs from our demand zone. Now, looking at this on a real chart, okay, we've got this indicator here. So this indicator, it's not actually the indicator. I've actually just placed the higher lows and the plots on this image, but you can get an indicator that's exactly the same as this. You can type in on TradingView, higher high, lower low, and you will be able to get an overview of how market structure looks, and it will look very, very similar to this. So here we can see we've got a higher high. This higher high has been formed by this higher low. This higher low is pushed up, it's created a new higher high in the market. However, this higher high has now had a push to the downside, breaking past this higher low and breaking past structure to the left here. And as you can see here, as price has pushed to the downside, we've now created a new low. But this low is now a lower low. As you can see on the key to the left, LL is a lower low, because this is now broken past our higher low. Now, when we continue moving to the right here, we can see we've had a slight pullback. We've now had what could be considered a change of character. However, the issue with this is now we've got a higher high here and a push to the downside. Now, when some traders would be looking at this as a potential change in character or even a flip within the markets, they're seeing that this supply zone here has failed and price has pushed to the upside. What they might not be looking at is the overall structure. And as you can see, we've had a mitigation from this point to the left here, where our lower high has formed. Okay, so this lower high has now had a retracement to the supply zone, created a lower high because it's lower than our higher high. Price is now pushed to the downside again, creating a new lower low, because this lower low here has clearly pushed beyond this lower low. And this continues all the way down this trend here until we get to this point here. Now we've got this lower low formed, and we've now had a push to the upside. Okay, now this has now been classified as just a high, not a lower high or a higher high. It's just classified as a high. Because what we've got going on here, we've now had a break past our lower high. So we've had a push to the upside, and we could have one or two things going on here. We could either have a liquidity sweep from this point, sweeping any trendline liquidity here or sweeping through these highs, and then a push to the downside. Now, as you can see, we have had a push to the downside because we've now broken past this lower low. However, what could then happen if we didn't get a push to the downside? If this high was then broken, we've had price pushing down, and then we've had a retracement back up, and we've now broken past this high. This could now be the indication of a new trend or a change of character or even a flip within the markets. So now we can incorporate our supply and demand zones into our highs and lows. Now, as we know, this area here was a higher high. This was also a new lower high because it didn't break past the higher high. And then we've had a lower high again, and so on and so forth. So we've clearly got market structure pushing to the downside. So we've now got supply taking control of the market. So taking long trades in this situation where we've clearly got bearish order flow, we've now got supply taking control of the market. Taking longs from here or any of these demand zones would not be a probable place to be trading from. So having a look at advanced market structure, what we can see in this situation here is we've clearly got a downtrend and we've had a pullback. We've now created a lower high, and then we've pushed down and we've now created a higher low. Then after this higher low is now formed, we've had a push to the upside, and we can see we've now created a new high. Now this new high, as you can see marked here, it's actually marked as a strong high. And the reason it's caused as a strong high is because we've now had a break to the downside. We've broken past this structure, and we've now classed this here as a sweep. Some of you may or may not recognize this as it's very similar to a chalk pattern, like a change in character or even a sweep. But what some traders might fail to notice is we may have some sort of supply or demand zone around here where this high has then come up to mitigate before it then decides to change its character and push into the downside. So this is where we can now classify these highs and lows as strong or weak. So this low here is clearly a weak low because we've got an overall trend to the downside. Okay, this high here is clearly a weak high because right now the overall trend is bearish. So even though this then got swept, it hasn't put in a new lower low. We've now had this higher high, which is clearly a weak point because this high is not completely confirmed that the new trend is going in a bullish direction. And then this high has then created a break of market structure here, resulting in the trend continuing to the downside. So pretty much the same in the other direction. We've had a bullish push to the upside. We've now had this higher high formed, a pullback. We've now had a higher low. We've now had a push to the upside, creating a lower high, and we've had this sweep of liquidity here. This sweep would not be confirmed as a sweep of liquidity until this new lower low or this new low would have broken structure here, pushing price to the upside. So if we was to disregard this push up, okay, at this point, this would have just been a normal break of structure. At this point, when this low then breaks structure here, this is when we can now look at this as a sweep. And just like the previous example, it's very, very similar to a chalk, change of character, or a flip, or we could then categorize it as a shift in market structure. Overall, from this small downtrend here, we've now had the market change its direction once again to continue to the upside. So let's have a look to see how this actually looks like in the markets. Now, at the end, when you download the PDF, you'll be able to see there is a link to this exact chart where you'll be able to copy that link, put it into your browser, and you can study this for yourself. And then you can also go to this exact chart as well, mark it up yourself, and see how you are seeing the market. So this is GBP Aussie dollar. So as we can see here, we've now had a high formed here. We've had a push to the downside. We've now had price push up this way. And as you can see, we've had a sweep of liquidity. This high is now being swept. But again, this would not be confirmed as a sweep of liquidity until we could see price continue to the downside. So at this point, you can either classify this low here as your break, or you could classify this large wick here as your break. Whichever is your trading preference, you could then categorize one or the other. However, what we now have is this is now classified as our strong high because this is the origin or the reason or the origin of this move to the downside to break this structure. Some traders may look at this area here that is the most recent supply zone before the break of structure. However, what we do with our LSM strategy is we always look for the extreme and the most extreme unmitigated zone to be trading from our strong highs or lows. And as we see, we've now had a further push to the downside, and this further push has now created some equal highs here, which has then later been swept. We've then created a new lower low, and at this lower low, we've now had a push to the upside. And from this point, we can see this high here in the middle of the chart, which has clearly swept the equal highs to the left. And what's happened here is we have actually had a sweep of liquidity. It has swept this high to the left just ever so slightly, not by a great deal, but it's clearly swept past this high just here. Now, at that point, this would have been classed as a strong high until we then see further to the right that this high here is actually swept past this one. And then this high has now been swept because we've had a sweep of liquidity caused by this strong low. So this would have been a strong low when this was formed. As we can see, we've had a sweep of liquidity. We've then had a push to the upside. And this is another area which could have trapped some traders into trading early, because what they're not looking at is the overall direction of the market is clearly bearish. And all we are having right now is this sweep of liquidity creating this low, pushing to the upside to sweep this liquidity to fuel the move further to the downside. So this is where we now need to concentrate on where the strong highs and lows are and what the overall direction of the market really is. And here we can see another example for US 30 or the Dow Jones. We can see we've clearly had a downtrend going on here. And what we've then had is a sweep of liquidity here, a push to the upside. And at this point here, this would have been a strong high because it then put in a new lower low. And then at this point, we've now had this new lower low formed. And when I mentioned that some of these look a little bit like a chock, you will probably look at this and say that this is a chock, depending on your preference or exactly how you specifically use a chock. We categorize them more so as shifting market structures. Okay, the reason we do that is because we're not looking for the precise entry models that we want for a chock or a flip. So as we've clearly had the markets change its direction, we're just generalizing that we've now had a shift in market structure. As we can see here, we've had a sweep of liquidity to the downside, and prices then pushed up and broke past what was our strong high. And now, because we've broken past a strong high and we've now had a shift in market structure, we can see that this is now a strong low, and this has then been further respected by the next strong low to the right here. And as you can see, we've had the exact same thing happen here. We've had a low formed, we've then had a sweep of liquidity. This wick has not broken past the previous strong low, and it's continued pushing to the upside. And from here, you can see we've then continued to create further strong lows to the upside. So we've had a sweep of liquidity here, we've then had a push down, a strong low has been formed, we have a push back up. We've now had another area here where we've then pushed to the upside. We've then had a sweep of liquidity, again, very similar to one of the previous highs here. This would have been a strong high, as it then did break past here, until we then had a further push to the upside. So this is an area that could get quite tricky when people are trying to take their trades, because they think that this is going to be the shift in market structure, but it's not been confirmed yet. And as you can see, we've then had this strong low forward, we've had a push to the upside. And this one here, it didn't sweep liquidity. However, if we did drop down, bearing in mind we are on the 4-hour time frame, this push to the downside, we may have seen what looks like a sweep of liquidity, or maybe the hourly chart, or even the 15-minute or something like that. Now, as we start to incorporate this with our supply and demand zones, and this is another example on CAD yen, we can see we've clearly had a sweep of liquidity here. We've now got a strong high formed, and then we've had a push to the downside. Now, as you can see with this example, this has been respected very, very nicely, because this is a strong piece of structure. And as we can see, we've now had this push to the downside. These areas are very weak because we've not had a liquidity sweep. And these areas themselves, these highs, would now be seen as liquidity points in the markets. Once we've had this mitigation, okay, we've seen price push to the downside, and then we've had price consolidate for a little while, as you can see, just going sideways. From here, we can now follow what's happening with the order flow. We can see we've had this high swept here, which is then a weak high. Okay, price has pulled down, it's failed to break past here. We've then had a a sweep of liquidity here, then we've had a new supply zone formed just here. Now, this area did not actually break structures to the downside, so this one would have been a little bit trickier to take a trade from. But what we can still observe is that we've still respected the order flow. We've had the sweep of liquidity, and this is the fuel for the move to further, the fuel to push price further to the downside, as you can see here. So if you miss this opportunity here, we could then look for a sweep of liquidity and look to take a trade from this demand zone that has caused this sweep of liquidity. So these are the sort of things that we do look out for the LSM strategy that we use. This is an area that we probably would have been looking to trade from, because if you've followed our Instagram page for a while, you'll notice that we do look for what we call trap zones. And these are usually supply and demand areas that are not either located within a strong high or low, or they are just in an area where they are too clean and too obvious to be trading from. So if we look at something like this area here, where we've got these weak highs, you can see that there definitely is some sort of supply and demand zone within these. This area just here, this would have been a classic trap zone. As you can see, if we follow price all the way to the right, we did have some sort of reaction just around about here, where price did react to it, push to the downside, and this in itself would have been inducing some traders into the markets thinking that price is going to continue pushing further down. But as you can see, price did not do that. It then continued pushing to the upside, sweeping this entire area's liquidity before it came up to our area here, which is a strong high, remember, because we've got this sweep of liquidity. This is where the market intended to push price to. So we've had this respect from here, and any late traders that could not capitalize into this move here would have had another opportunity to get into the markets around about here. So I hope this has been useful for you guys. This is kind of what we are looking for with our market structure. This is only a snippet of what we're going to be looking for within the LSM strategy. There is a few other points that we do cover within the LSM strategy. As you can see here, structure is one of the lessons that we do cover. We also do cover in quite a lot of detail about liquidity, our POI selection as well, our lick. So what a lick is it's an extreme refined candle with inside a higher time frame zone, and it has specific characteristics that we look out for in terms of taking our trades, in terms of inducement and having its trap zones. We also look at our entries in quite a bit of detail, market approach, trade management, market cycles. We also use the divergence, and then we also have quite an in-depth psychology series, along with some further learning sessions that are usually requested by people in the community. So as you may or may not have known, we have had a Black Friday sale for this weekend for 25% off your first payment. For you guys in the webinar today, if you are looking to get involved with SMTFX, then use webinar 40 as the code to get 40% off your first payment. If you are not interested in joining us, then that's absolutely fine. I hope you've taken some sort of value from today's webinar. If you have any questions about today's webinar, please feel free to drop us a DM at SMT_FX. So if there's anything that you're not too sure about today, I'm more than happy to answer your questions if you're not ready to get involved with us. Some of you may just be looking to enhance some of your knowledge and use this to bolt onto your existing trading routine. So before we finish off, if you wanted to download the structure PDF, it will cover everything it will have included everything we've covered today. You can either scan this QR code, or if you take a screenshot of this screen, you'll be able to follow this link here and you'll be able to get your copy of the PDF guide, and you can keep hold of that and do what you want with. So guys, I hope you have found this useful. If you found value in this content, please give us drop us a message on Instagram, or if there's any questions at all about what we've covered today, again, feel free to drop us a message and I'll be happy to help you out. So guys, hope you all have a great weekend and we'll see you soon.